This is the Friday, January 9th, 2015 version of the Market Plus segment. Joining me now is Elaine Kub. Elaine, welcome back.
Good to be here.
Now, we've got a number of questions here from our folks on Twitter and Facebook, and I'd like to start here with Derek Ott's question. Derek is a Twitter question, and I think it's a good intro to what to expect in 2015. Derek is curious, do you see the market staying steady at current levels, or do you expect to see demand increasing over the next year?
I think there's reasons to believe that there's sort of a lid on these prices right now. Ethanol would potentially be in danger of losing profitability as crude oil is falling and fuel. Ethanol price is like $1.40. So at this point, it's okay, but going forward, you don't really know what's going to go on there. And with the dollar, the U.S. dollar going higher, that's another headwind against higher prices. So I think at this current level of demand and this current production situation where you don't have any reason to believe that we're not going to have another record crop in 2015, you've got a lid on prices. But as demand continues to grow, I think there's every expectation that the livestock industry and the international livestock industry is going to continue wanting feed grains, and they could grow 6 or 7% per year, I mean, theoretically. So yes, if and as demand grows, that lid may slowly creep higher. But at this point going forward, I think we're going to be pretty range-bound at this level.
Now, you talk about demand growth from international livestock. Is that kind of what we're seeing in China after their approval of the MIR 162? Do you expect to see their importation of DDGs increase over this next year?
Yeah, wow. I hadn't been paying a lot of attention to DDG prices, but I looked and they've been up 50% in the past month. You're talking like $185 a ton in Nebraska, and that's not as high as it was a year ago. These are not record high prices for DDGs, but yeah, that's going back to the ethanol profitability. That's the thing that's going to keep that demand, that part of demand for corn certainly coming. So yeah, I think that the Chinese demand for DDGs is nothing to sneeze at. That's incredible. And
we've talked on the show about their refusal to import corn from the U.S. with the MIR 162 gene. Now they've approved it. Yep. So there's a lot of hope that China could be a big corn importer as we look to this next year. Maybe their approval was a sign that they need more corn. Do you anticipate that? Does it look like the trade is thinking China might be a big buyer?
Well, I mean, I was always sort of on the conspiracy theory camp that they, you know, obviously if they need the corn, they weren't as concerned about that gene as they pretended to be. They just had larger stockpiles of corn on their own. So at this point, again, in 2015, we don't know what their production prospects are going to be for corn. They traditionally like to grow feed grains themselves and use the North America and South America more for soybean importation, but it's really hard to say at this point what their plan is for corn specifically.
But the door is open.
The door is open, fortunately. That's great.
All right. Now you did mention early on we're not anticipating another record crop in 2015, and I assume you were talking about corn.
Yeah.
Because as we take a look at the bean market, Philip Shaw, our friend from Ontario, Canada, is curious, are we overestimating U.S. soybean acres in 2015? We've heard reports of 86 to 87 million acres of beans after 84 million last year. Does that seem reasonable?
Well, sort of yes and sort of no. When you look at the price ratios between, let's say your only options are corn and soybeans, you're in the heart of the Corn Belt. Let's throw out the idea of planting other specialty grains like in the North Dakota, or even wheat got a lot of acres this past year, just as coming back into the rotation in some of these areas of the Corn Belt. But just between corn and soybeans, the price ratio is a statistically perfect expectation, 2.4 to 1. So there's no big price push to plant soybeans over corn. The reason why I think people are excited to be planting soybeans rather than corn is because there's less input costs. You're not going to waste as much money putting it into the ground. But I think that was the argument last year and the price argument last year. And yes, beans got more acres then. But going forward, particularly in the heart of the Corn Belt where you've got pest pressure, I don't think there's going to be that many beans on beans. I would be on the much lower side of the soybean acreage for 2015.
Maybe touching last year's acreage, potentially.
Sure.
Okay. And now, you mentioned the wheat market. We've got a question here from Jared Yeager. He's curious, do you think we'll go up and retest the highs in the Kansas City wheat market?
I don't see why we would. I will point out that the hard wheat varieties, Kansas City wheat and especially Minneapolis wheat, are underpriced compared to the benchmark Chicago. Minneapolis wheat should be 20 or 30 cents higher than it is right now because it's only about 30 cents higher than the Chicago, just as a statistical expectation. So from that perspective, I would expect hard wheat and Kansas City wheat to come up a little bit, but no, I don't see any fundamental supply and demand reason for that wheat variety to suddenly go back to December prices.
Exports haven't been phenomenal or anything,
no, they have
anything
not.
too special.
I mean, the idea would be freeze. I mean, you had some sort of frost damage in the spring, perhaps, but that hasn't happened yet, so no.
All right. Now, we've talked a lot on the show recently about crude oil, and that, of course, has been a major story in the media. We have seen crude continue to fall. As you sit here today, Elaine, where do you think this crude market could go in the next week, month,
well,
year?
I mean, yes, that's quite a wild
Gaze into your crystal
right?
ball, yeah.
But I believe that it has downward potential still because, like as I mentioned before, North Dakota has not stopped issuing new wells. I mean, there's still the impulse to continue developing that industry there and pumping it out even at unprofitable prices. Saudi Arabia has indicated their strong intention to keep pumping it out at whatever price because they want to push out the less profitable producers. So while the whole industry is playing this game of chicken of who can lose money the longest and the fastest, I think you've just got this entirely bearish supply story that could keep pushing this down further. I think I would be surprised to see it below $40. I mean, this would be historic levels. That would be surprising to me, but...
Because in 2008, in the depths of the recession, or at the beginning of the recession, oil got down to low 40s, maybe high 30s?
Yeah, but it was never 30 something. I mean, it was never below 40. I don't really remember. I don't have a chart in front of me, obviously, but I think that we've priced in a lot of it, but it doesn't sound like anybody is going to suddenly cut off supply yet.
Okay. All right. And now as you look out, these lower ethanol prices, could this be bullish on the protein side as we look at the meat markets? Are families going to take their extra gas savings and spend more on steak and pork chops and poultry?
Well, let's hope so. And, you know, the funny thing is that the demand for beef as sort of a luxury product has never really fallen off domestically. It only recently, in the most recent November export numbers, started to suggest that foreign buyers of beef are starting to be price sensitive, but that's probably more to do with the dollar than with the price of beef itself. So I don't know. I mean, maybe you get the argument for pork and poultry is that, yes, that might work more into the grocery bill. Yeah. Okay.
Now, before we let you go, you did talk about how the international buyers have started to shy away from beef. The dollar is continuing to climb. Does it look like there's still some upward momentum in this dollar?
Yeah, all of the influences that have made it rise thus far, are still in place. Europe has continued to suggest that they want to keep the euro cheap. You guys have pointed out the employment numbers are great. The U.S. economy is doing well. So if you're an international investor trying to park your money somewhere, the dollar is still the place to go. So I think all of those bullish influences are still in place. I don't know where you might expect that to. I mean, we're at 9-year highs now. It would have to about double to be a 15-year high, if I'm remembering the chart correctly. But I think it's going to continue to be strong.
Present a substantial headwind to commodity exports in 2015?
Depending on the commodity, yeah. I mean, if you've got something like wheat, which has lots and lots of international competitors, yeah, that's a real problem.
All right. Well, Elaine Kub, thanks so much for taking the time to be with us this week.
Thanks, Mike.
And thanks to all of you for sending in your questions via Facebook and Twitter. Please continue to do so, and be sure to tell your friends to do so, and we will continue to get expert analysis right to you. Thanks for watching, and have a great week.